Okay, welcome back, Pete. We are in a bit of a different scenario today. Do you want to tell the audience what is happening?
Well, we're on the podcast, but we're not on the opposite side of the table today, that's for sure. We're actually on opposite sides of the country. I'm in Perth. Unfortunately, my flight got cancelled on the red eye coming back from Perth. So rather than being in Brisbane, I'm actually recording from the hotel room over here.
Yeah, so our wonderful podcast producers have managed to make it all work. Got a very, late email from you last night, I think after your flight got cancelled saying, uh-oh, we're in a bit of a dilemma here. And our lovely guest today has flown in from Sydney. So we didn't want to cancel today because usually we do like to do it in person, but the podcast producers have made it all work. So it's going to be a different one. If you are watching us on YouTube, uh, you'll probably see me glance to my left a little bit. That's because our teleprompter, I suppose, with Pete's face is sitting to the left of me. So it's for me, I'm so used to looking at Pete for cues and things like that as we record. So it's going to be an interesting. It's going to be an interesting episode, but I'm very confident that it's going to go well. So, Pete, why are you in
We
Perth? What's
have, we
happened?
have, we, Yeah, look, we have the technology. We will make it work,
We
and I'm sure this
do.
will be a cracking episode. Look, I'm in Perth because we've been on the Halo and Ninja One MSP Roadshow. Perth was the fourth event in that series, and Brisbane next week will be the last one. So, look, it's been fantastic to see what they're doing in the market because there's a lot of change going on. ConnectWise recently announced their intelligent platform as well. Lots of the PSAs are leaning in to the changes around AI and enabling MSPs to leverage that capability where they spend most of their days. But I know you've been super busy as well, Kayla.
It has been a busy couple of weeks since we last recorded. We're going through an office move again. So I think when we recorded season 2, we were going through an office move. So it feels like every season there's an office move, which has been interesting. I was actually in Sydney this weekend. Just for watching some racing actually, which was super interesting. We've been really busy getting new customers onboarded at inception, and it's been a really, really busy time of year. I think I heard it referred to as May Madness and end of financial year madness.
Yeah, definitely. There's something in the water at the moment. I think for every MSP that I'm talking to, customers been thinking about things for the last 11 and a half months have realised that they want to get something spent this
Yeah.
side of the financial year, and lots of pre-billing and lots of hardware being ordered, and yeah, I just think everyone's definitely super busy as a result.
It has been. Well, as we know, season 3 is our expert series. So, everything to help you be a better business owner. And today we are joined by Derik Karamian, founder and director of the Australian Loan House. So, Derik spent a good number of years helping business owners and professionals and families sort of navigate that often complex world of insurance, home loans, business finance, investment lending, for both commercial and personal finance reasons. And we sort of wanted to bring Derik on today because one of the challenges I think a lot of business owners face is traditional lending doesn't really work in the way that it does for salaried employees. So, when you're self employed, there's obviously a lot of requirements associated with getting lending. And so, Derik is going to talk to us today about some of the ways in which he helps business owners, some of the things some of the common mistakes he sees, how to obtain finance a little bit more easily if you are self-employed, and what a good position looks like if you want to buy a home or borrow for investing or whatever that scenario is for you. What's going to make you stand out to the bank. So, Derik, welcome to Two Sides of the Table.
Thank you, Kayla. Thank you, Peter. Very excited to be here. I really appreciate the opportunity to come and have a chat. Thank you very much.
No worries. And so I suppose let's start with, I guess, the basics. Like
Yes.
what is the bank looking
Yes.
for with
Sure.
regards to that? And what do you see sort of happening at the
Sure.
moment?
So with business lending, the traditional model has been ABN has to be registered for 2 years. Some banks would allow 18 months, but generally 2 years. And they would previously they would like 2 years of tax returns. So if you were a company structure, you would have your company financials, company tax returns, individual tax returns, or if you're a sole trader, just an individual return. Now, most small to business owners, they tend to be a company structure. You don't see too many sole traders, but they're still around. And generally, they want 2 years of the company financials and the individual financials and tax returns for all the directors in the business or the people applying for the loan.
Yeah.
So that was historically the requirement of the major banks.
Okay. Yeah.
Yeah, yeah. And so now what? Now there's been a shift with lenders because they've realized that's not not as easy for some, and it's a more it requires more effort on their behalf, and it has slowed down lending for business owners. So a lot of lenders now, they're looking to move away from the 2 years financials. A lot of lenders, the traditional lenders that is, they would get a 1 year financials, and some lenders don't even now require a minimum time for the ABN to be trading. So
Wow.
there has been a shift.
How recent is that?
So for example, NAB came out 6 months ago
Okay.
and said we no longer look at how many months or years the business has been trading, as long as they can demonstrate serviceability.
Wow.
Now, the flip side is if you've just set up a business, chances are 6 months down the track, you don't have the track record or the financials to prove it. But some businesses do. Some, they set up the business, next tax year tax return they lodge is quite strong, shows a healthy profit, they can get a loan. Or some banks like ANZ or NAB, they will even look at just the salary you pay yourself, and if the loan service is just on the salary you show in the books, they don't need to see your full financials, full tax returns.
Yeah. Wow.
So the environment is definitely shifting.
Yeah.
They want to encourage business owners to get more lending, because small business owners are really the bread and butter of lending.
Yeah. Well, we were sort of seeing that, right?
Yeah.
You know, I think it was something like 80%, or maybe it was even higher, of the economy is stood up by small business
Yes,
owners,
yes, yeah.
and yet it is the most.
Yeah.
It's the hardest, I think, to be able to get
Yes,
lending in any
yes.
form if you're a small business owner.
It's funny
Well, it was.
with business lending. If you want to buy a property, a home, they make it a lot easier. But if you want a business loan for expansion, acquisition
Yeah.
purposes, they make it very hard.
Yeah.
And that's the challenge a
Yeah.
lot of small business face, because
Yeah.
you want to get $500,000 to buy something, expand. Banks make it very difficult, reduce the loan terms,
Yeah.
make it with higher interest rates, require more security. And that's where the challenge lies. And that's where a lot of business owners need the money
Yeah.
to help them grow, to help them expand. It's not just about buying a property. You want to buy another business, you want to buy an office, you want to buy a premise. Yeah.
Yeah. What's
So,
oh.
Nope.
yeah, we're getting used to the remote presenter. And so, Derek, you mentioned company and you mentioned sole trader.
Yes.
Look, obviously, in the press of late, there's been a lot of talk about family trusts and
Yes.
trust structures.
Yeah.
Look, I know for a number of our listeners, historically, they've set up their businesses through a family trust,
Yeah.
because sort of 15 years ago, that was sort of the flavour of
Yes.
the month for many accountants.
Yeah.
Do those rules apply differently to a family trust structure than a proprietary limited company?
I do see a lot of clients, and that is a very common structure where you've got the company and the shareholder is a trust, and the rules are somewhat similar. But the only thing that's changed recently is a lot of banks have restricted lending to trusts. So you can, if you're looking to buy the asset in the name of your family trust, with the exception of NAB, a lot of the majors are not doing that anymore. Macquarie Bank completely pulled out, and with ANZ and CBA, you have to have an existing loan with them and have been a customer with them for a minimum of 6 months
Yeah. Right.
before they consider lending to you, and then they require larger deposits than a normal loan if you just bought in your personal name. There are second tier lenders that still lend to trusts. However, the rates and fees are higher. So it feels like there's been a directive from APRA or the government that they want to restrict investment lending and lending to trusts to encourage maybe more first home buyers and individuals getting into the market, because generally they're not the ones that have set up their structures in a trust. But back to your point, Pete, the requirement is the same. If you do have a trust, they would require 2 years worth of tax returns for the trusts. Now there were some exceptions in the past. A few of the banks have closed this loophole where if your trust was trading profitably and you could get your accountant to write a letter saying the trust meets its obligations, they wouldn't require all that. So,
Yeah, wow.
so there's a few ways around that. But for the back to your question, Pete, yeah, the short answer is it's roughly the same requirement for family trusts as it is, because a lot of business owners have a company, shareholder is a trust, they pay distributions to the trust, so the bank would require the 2 years or 1 year tax return for the trust as well.
Yeah, wow. So it's pretty easy, you would say, to get money into a trust, or is the rules have changed too
Well,
much that
now this year it's become more difficult. Up until
yeah,
recently,
yeah.
it was a lot simpler, and there was a loophole, and you'd see a lot of the Facebook influencers how they bought 10 properties or 20 properties within a certain period of time, and a lot of that was bought through a trust.
Yeah.
But unfortunately, the banks have clamped down on it,
Yeah.
and NAB is the only bank that's allowing you to borrow in a trust
Yeah. Wow.
without having to jump through a
Yeah.
few hoops.
What are the sort of differences
Mm.
that you see between, like, say, buying in a trust,
Mhm.
buying personally, maybe buying through a company
Yeah,
as well? Like, what are the sort of differences and the benefits that you
yeah.
see for people, but also the difficulties that you
Yes,
see?
yeah. So the benefits are for buying in company or trust structure versus personal, obviously asset protection.
Mm-hmm.
We all get married and have best intentions, but things can happen, and people do structure um, their properties in a way that it's held in trust, so it's more difficult
Mm-hmm.
come
Yeah.
divorce. I see a lot of legal professionals or accounting professionals that buy properties in trust in the event if they ever get sued or they're liable for anything,
Mm-hmm.
the assets are off limits.
Mm-hmm.
So there are a lot of, and also there's tax benefits.
Mm-hmm.
Now, post budget, those
Yeah.
tax benefits
Yeah.
have gone, but up until recently, there was a lot of tax benefits for buying in a trust. Now, if you're a first home buyer, chances are you're not going to buy in a trust. And generally, what would happen is you would buy maybe your first place, a smaller place in your personal name, you and your partner, and then as your business grows, your income grows, you set up a family trust,
Mm-hmm.
and then you start buying in those trusts. And what would happen is you can set up multiple trusts and have multiple entities or companies and buy in those names. And up until recently, the banks would allow you to do that without really scrutinizing it too much.
Mm.
So the benefits are it allowed you to borrow more. It allowed more asset protection.
Mm.
Now the negative was generally with trust and company loans, you have to provide generally a bit more of a deposit
Mm-hmm.
than if you were buying in your personal name. Sometimes depending on the lender, the rates may be a bit higher,
Mm-hmm.
and there's a few more documentation requirements. Your trust has to be registered for a certain period of time. The company has to be registered. You have to provide personal guarantees. So there's a few more requirements, but the benefits outweighed the cons up until recently.
Okay. And so,
Yeah.
what does the budget
And
change? What is the budget change sort of done for that?
Well, what's happened is the tax implications of a trust of basically doesn't apply anymore.
Yeah.
So it's more of an accounting question. I'll do my
Okay.
best to answer it, but the way a trust is taxed now is no different to any other way. So
Okay.
there's no point.
Yeah. Yeah.
Short answer
Yeah.
is. Whereas before, the distributions from a trust were taxed less.
Yeah.
Yeah, and a lot of business owners did that for that reason.
Interesting. Okay.
yeah, and Derek, I think for many business owners, they're really looking to either, buy an investment property or maybe buy the holiday house on the Sunshine Coast or Gold Coast or wherever it is that they might be. And structure for them is often not as
Mm.
important as just being able to make the purchase.
Yeah.
Look, I know going to the pub and chatting to mates that have got normal jobs, it seems like it's super easy. They just give up their, 2 months of pay slips,
Yeah,
and the
yeah,
banks seem to be very accommodating. And having been through the process myself, it always feels like a paperwork warfare.
yes,
I've got
yes,
to give a P&L, I've got to give a
yes, yes,
balance sheet, I've got to then give more information here and
yes.
more information there. Is that a common thing that you see the banks ask for a lot of information through
Uh,
this
i
process?
it's gotten better, Pete. It's honestly gotten better.
Mm.
But yes, when you're a normal employee, literally some banks just want one payslip. If you've been in your role or term longer than 2 years, don't really ask any questions. One, maybe two pay slips, and that's it.
Mhm.
Whereas with a business owner, there are a lot more hoops you need to jump through, and the paperwork requirement is much more. The challenge I see with business owners is they often at this conflict between how much should I show, how much tax should I save versus what my goals are to build wealth through property. Now, unfortunately, sometimes they conflict because you need to show a certain level of income to buy that holiday house, to buy that investment property, and a lot of business owners they want to structure their finances in a way that they're minimizing tax. And by minimizing tax, you're reducing your taxable income by, through a company structure, trust structure. And that unfortunately creates problems with getting a traditional loan with a bank. So unfortunately, there are no ways around it. But this is where a broker comes into it,
Mhm.
where if you just walked into a branch and wanted to apply for a loan and you're a business owner, it's going to be a terrible experience.
Yeah.
They're going to ask you for your tax returns, your ATO portals, everything you can think of, and then even after that, they might still decline the loan. And this is where a broker comes in handy, where they know the lenders that are best for this and provide the easiest way of getting approved. Now, that being said, there are alternate lenders that all you need is maybe a letter from your accountant or your last 6 months BAS to confirm your income, and you can get a loan, but the rates are higher, the fees are a bit higher. But yeah, Peter, generally for business owners, it is a bit tougher, but now some of the policies of the major banks are shifting, and it is becoming a bit easier for a business owner to buy a home or to buy that investment property. But it also depends on the structure of the business as well. If
Mhm.
you're just a simple structure, it shouldn't be as bad as if you have multiple entities paying different entities, drawing funds from one entity, paying into the other. A lot of business owners put their partner on the books to minimize tax. So those things do add up as well.
Mm. I remember when we bought
Mm.
our current house, and we had a smaller, like you say, the first
Hmm.
house that we bought, the
Yeah.
the unit that we had, and it the first time, like, relatively easy,
Yes.
right? Like, we had a small
Yes.
deposit.
Yes.
We both were salaried
Yes.
employees, and super easy.
Yeah.
Like, it was
Yeah.
hardly.
Yeah.
The second time, I was very fresh into
Yes.
business,
Yes.
and my husband was still a salaried
Yes.
employee, so
Yeah.
he had a very
Yes.
regular, very high
Yeah.
income. But they still wanted every
Yes.
little
Yes. Yes.
detail of
Yes.
everything.
Mm.
And because I moved from sole trader
T-
into a company
Yes.
structure,
Yes.
the company wasn't old enough for
Yes.
that
Yes.
2 year mark.
Yes.
This was
Yes.
probably 2.5 years ago that we
Yeah.
did this. So
Yeah.
I think old
Yeah.
rules compared to what you're talking
Yeah.
about now. It was like they still wanted 2 years of tax returns,
Yes. Yeah.
but the company wasn't old enough. So I had
Yes.
to do a year of sole
Yeah.
trader
Yeah.
and a
Yeah.
year of
Yeah.
company. But the other thing is that we were trying to borrow the money just after the end of the financial
Yes.
year.
Yeah.
So the bank wanted the most up to
Y-
date
Yeah.
tax
Yeah.
return. So we had to rush to get this
Yes.
tax
Yes.
return done.
Yes.
And like our accountant
Yeah.
turned it around in like three
Yeah.
days.
Yeah.
But it was the most stressful process I think
It
I've
is.
ever
Yes.
been through
Yes.
because of the mountains of paperwork
Yes.
and compared to the first time, my income looked like this.
Yes.
And I'm making a small gesture for anyone
Yeah.
who's not watching on YouTube. But my husband's made
Yeah.
up like
Yeah. Yeah.
75%
Yeah.
of it.
Yeah. Yeah.
It was just such a stressful experience. And Pete, I know you've mentioned to me that you've been through a similar thing. Like you said, it's like paperwork warfare.
Yeah, look, 100%. And I think many of our listeners will probably be able to then, relate to that as well. And, traditionally, I sort of grew up. I was a CBA Dolomite guy, basically. Went to school, and so that's the first bank that you go to
Yes, yeah,
in regards to that. And I think, often, we're a bit lazy and inertia, and it
mm,
wasn't until I started business that I realised that not all banks are the same.
yes, yes,
And I remember actually, when I first started the business, like many listeners, getting actually rejected by a traditional
yeah,
bank. And that's just because they had particular rules, and
mm,
the square peg didn't fit into the round hole. And
yeah,
and that's where I first discovered brokers, because I actually didn't
Mm.
realize that, a broker actually existed, because I just thought you just went to the bank and, you got the home loan through there, because that's how I, transacted previously. But listening to you, Derek, it just sounds like there's just so many different options out there and so many different ways to navigate that. So, the ANZ looks at it this way,
yeah,
NAB look at it this
yeah,
way. And, as a busy business owner, there's no way that I've got time to go and do all of that research. Even with Claude and
yeah,
ChatGPT, I still can't get all that information. And so, is that really what a broker does
yeah.
for customers?
I believe I believe for business owners, it makes a lot of sense to engage a broker. We're
Mm.
all business owners. We all don't have the time to sit down and study the credit policy of 4 or 5 different banks, then see which rate is the best and what we want to do. So basically, a broker is someone you engage that and they go identify the best lenders for your situation. A
Mm.
good broker will look at your financial situation and say, Kayla, you're going to waste your time with this
Mhm.
bank. They're going to
Mhm.
ask for so many things. We can go to this
Yep.
bank and get that loan
Yep.
approved within 3 days.
Yep.
Now, to your point, Pete, a lot of people were with CBA. They have their Dolomite accounts with CBA. They just assume they're going to go into a branch and they're going to get approved because they've done their banking with CBA since they were a child. But it doesn't work that way. The banks are very different
Mhm.
in how they treat self-employed clients, and also industry matters as well. If you're in a certain industry, I know that some banks are better than other banks.
Mm.
So if you're a medical professional or a legal professional, I would choose one bank versus if you're an IT professional, or if you're a plumber or a tradie,
Tradie. Yeah.
you're gonna deal with another bank. So there's a massive difference, and that I believe is where a broker really adds value. So the recent statistics came out that 81% of loans done in Australia originated through the broker channel.
Mhm.
So pretty much everyone does their loan through a broker channel, and it makes a lot of sense, especially if you're a business owner. Now, ChatGPT, those kind of things, they're not very helpful when it comes to identifying credit policy. And there's so many different ways that banks assess income, things they don't classify. For example, Macquarie Bank, that they don't factor in any company debt when it comes to servicing or approving the loan.
Okay.
Most of the major banks do. So a lot of tradies have, car loans, maybe some equipment finance, things like that that they run through the business. Macquarie Bank won't factor that in when it comes to servicing. So your average person won't know that. They'll just go
Mm.
to their normal bank, and the normal bank will knock it back because it doesn't service.
This is for home loans.
For home loans,
Yeah.
yeah. So those, to your point, maybe if you'd gone to a broker at the time.
We did
Oh,
use a
you did
broker.
go through it?
Yeah.
Wow, and
Yeah.
it still went. Was it
I,
through Commonwealth
it
Bank?
was.
Yeah,
Yeah.
yeah. I was gonna. I don't want to name bash, but yeah. There's just a lot. Your broker should be able to identify these lenders
Mhm.
to minimize the paperwork and the stress as much
Mhm.
as possible.
Mhm.
Yeah,
Mhm.
yeah.
Yeah.
So that's what a broker does, Pete. We get a client, we identify his or her financial needs, goals, and objectives, and we find out which lender is best equipped to assist them now and also in the future, depending on what their plans are.
Yeah.
Yeah,
Yeah. It's
yeah,
it's
And so, Derek, it sounds like a fantastic service. And having used, a broker myself,
yeah.
and had amazing experience with that.
Mm,
But one of the things going into that is, well, how much is it going to cost me? Like, what
mm,
do I need to pay to engage a broker to
yeah.
yeah.
do all of this work for me?
Great question.
So the beauty of our model is we don't charge the client. It's a complimentary service to the client.
Wow.
We get paid by the banks.
Mm-hmm.
So we get a percentage of the loan amount in what they call an upfront commission.
Mm-hmm.
And then we get an ongoing deferred trail for the life of the loan. And so for you as the normal consumer or individual, there's no fee involved. So if a broker's charging you a fee, they shouldn't be.
Mm-hmm.
9 times out of 10, it's a complimentary service. And we get paid the same commission regardless of which bank we go with.
Yeah.
So there's no incentive or agenda for us to
Yeah.
recommend one bank over the other. It's whatever's going to suit the client's
Yeah.
needs.
And that's actually great to know, because I always had that thought that a broker would go to a certain bank if they
Yeah.
knew there was a particular kickback or
Yeah,
something like that.
no.
Is that a rule
That's
from
that's
APRA?
that's that. So since so I became a broker 11 going on 12 years now, and when I first joined, there were some lenders that were offering a bit more commission or a few more, incentives for to write business with them, but that's gone now.
Yeah.
Pretty much, majority of the loans are written through the Big Four,
Yeah.
and they all
All their
offer the same,
subsidiaries, yeah.
and they all offer the same commissions.
Yeah.
Now there are some second tier, private lenders
Yeah.
that they pay more commission,
Yeah.
but for your traditional lenders, it's all the same.
Yeah.
It's all the same. So there's no real incentive for a broker to recommend one bank over the other, except for whatever's best for the client.
Yeah.
Yeah.
Yeah. What about and maybe this is an accounting question, so feel free to
Yeah.
chuck it back to me. What do you think are some of the strategies that business owners can do in their businesses
Yeah.
to prep them? Like if
Yeah.
they know, like in 12 months' time, I
Yes.
have the goal to buy
Yeah.
another house.
Yes.
What is something that they can be doing in their businesses or maybe even in their personal
Yeah,
financial
yeah.
situation to prep ready for
Yeah.
that?
So I always start by telling business owners, know your numbers. It's
Mm-hmm.
amazing how many clients I get where I'll just ask them, what's the profit like?
Mm.
And I'll get very different numbers to what's actually on the
P&L.
P&L.
Yeah.
So one thing is knowing your numbers, because a lot of business owners may know their revenue
Mm-hmm.
and may know their turnover, but the banks don't look at your revenue or gross profit.
Mm-hmm.
They look at net profit.
Yeah.
So your net profit could be very small, could be very high.
Mm-hmm.
So knowing your numbers is important. It's important if you're planning to buy a property as a business owner in the next 6 to 12 months, I would recommend you start paying yourself a salary.
Yeah. Okay.
A lot of business owners don't,
Mm-hmm.
and it just creates challenges.
Mm-hmm.
Now, there are ways around it,
Mm-hmm.
but the easiest way is just to pay yourself on the salary,
Yeah.
be on the books. So when there's a ATO income statement, you can prove you've paid yourself X amount of salary for this period. Then the other thing is clean up your financials. What I say is, if you've got a few credit cards you don't need,
Yeah.
close them off.
Yeah.
Make sure your business account conduct is good. A lot of business owners have overdrafts, and a common thing that I see is maybe better than an overdraft is to try to get a line of credit rather than an overdraft. Because the reason I say that is technically every time you use your overdraft facility, it shows in your account conduct that your account is overdrawn.
Mm.
Whereas when it's a line of credit, you can just transfer the money into your account.
Okay.
And if you need that money, use it and then eventually transfer it back. So
Right.
try not to overdraw your account. Try not to dip into overdraft facilities. But business owners, it's tough. Cash flow is very
Yeah,
important. I
yeah.
know myself, cash flow can be challenging. Sometimes you have a bigger tax bill than you expected or something happens. And then also try to kind of get a deposit ready as well. But I think the two main things are if you know your numbers
Yeah.
and you kind of put yourself on the books, you're paying yourself a consistent salary, it just makes it easier.
Yeah. Oh,
It
when
gives you
I-
more options.
When we brought our first small place, it was like we had to show that we were growing that deposit over, say,
Yes,
the last
yes.
year. Has that changed now? Because like you could just pull your dividend
Yeah.
out and use that as a
So,
deposit.
that's you're probably referring to what's called genuine savings. So
Yes.
you need to verify genuine
Yeah.
savings as a first-time
Yeah.
buyer. So that doesn't really apply if you're buying your
Okay.
second property. Generally, what that means is genuine savings. If you only have a 5% deposit for your first place, a lot of younger people taking advantage of the first-time guarantee scheme or some of the incentives available. They need to show that they've saved that 5% over a period of 3 months. It can't just be a gift from mum and
Yeah,
dad. You
yeah.
can't just have
Yeah.
won a lotto, put that money in your bank account. So
Yeah.
they need to see that over 3 months. Now, that just applies to your first property. So if
Okay.
you're looking to buy subsequent investment
Yeah.
property, as long as you've got the deposit,
Yeah.
yeah,
Yeah.
they're not really questioning.
Yeah,
Yeah,
right.
yeah,
That's cool. I didn't
yeah,
know that.
yeah, yeah.
Okay, good to know.
Uh,
Um,
and so, Derek, we've spoken a fair bit about home loans, and I
Yeah.
think one of the other things that brokers can help you out with is with business loans,
Yes.
correct? Am I right with that?
Yes, that's correct. Yes.
Yeah. And you briefly touched on, you've got line of credit,
Yeah.
you've got overdrafts, you've got, equipment
Mhm.
finance, you've got chattel
Yes.
mortgages. Do you want to maybe just dig a little into some of the common structures from a loan perspective that you're seeing business owners use?
Sure, sure. So generally, what most business owners have, and what I see is that they might have a home loan. They usually have some form of chattel mortgage or car loan,
mhm.
um, that they buy a company car or something through the business. Depending on the nature of the business, they'll have some equipment finance. A lot of business owners will have a overdraft or line of credit facility, and then you'll have, like maybe a business credit card or two. And it went back to my point about, for example, Macquarie Bank doesn't factor this in your servicing when you apply for a home loan. So these kind of things, if you're not getting the right products, they can restrict your ability to grow in the future by getting
Mm,
more lending.
mhm.
Um, so, for example, I just recently did a business loan for a client. They wanted to buy into a business. They were buying a 10% share in this business, and that 10% share was worth 300,000. And we were able to use the home loan equity and then get an unsecured business loan with NAB to fund the difference at a term over 15 years. So there's a lot of different options where
Yeah.
brokers can really help. And I believe this is where brokers add the most value.
Yeah. Yeah.
Home loans are great, but a lot of businesses need business lending support. That's how they grow,
Mhm.
and that's how they sustain their business. And a good broker can really add value there. I see it, just getting a simple overdraft. The major banks will make you jump through hoops. There are a lot of second tier lenders that will just literally look at your 6 months worth of activity in your bank account. And
Mhm.
if the credits are there, they'll approve you up to X amount.
Mhm. Why do you think then, like you mentioned at the beginning of the episode,
Mm.
that it's still really hard to
Mm.
get business? Like, why do you think then, like you're saying, business requires lending to grow?
Mm.
That's how a lot of businesses
Yes.
grow. And between my husband and I, we've
Yeah.
got three of them.
Yes.
So we have had to use
Yes.
credit to,
Yes.
lending to grow in some areas.
Yes.
Why do you think it is so tough? Like, what's your view there? Like, is it risk
I
associated?
believe it's probably risk. I
Mm,
believe the banks just look at business owners as a riskier type.
mm,
I don't see that. I think business customers are more loyal.
yeah,
I try to target more business owners
yeah,
because I feel that if you do a good job helping a business owner,
yeah,
they're going to be more loyal. They're less likely to shop you around for
mm,
rates, things like that. They want to just make sure what they want is
yeah,
provided for
yeah.
them. I think the bank looks at it from a risk point of view, and I'm just trying to think why else the banks would make it difficult. I think some of these facilities are unsecured,
Yeah, yeah,
and the banks, they don't like
yeah,
unsecured. They
yeah,
just
yeah.
they just don't like it. It doesn't matter. I've had businesses, with $11 million a year turnover.
Mm-hmm.
Got to jump through so many hoops to
Mm,
get like a $300,000 unsecured facility.
yeah, wow.
Uh, you know, they're on paper making a lot of money, but the
Hmm.
banks just ask a lot of questions.
Yeah,
Whereas there's other lenders that literally upload your 6 months bank statement into their portal and they'll approve it within 3 days.
yeah, yeah, yeah.
And then the challenge is that those rates are higher, and it's really unfair for the business owner. They're getting penalized by
Mm-hmm.
having to pay a higher rate and pay higher fees to get the service
What
they
they
need,
need. Yeah,
but they just have to because they need that to grow.
yeah, yeah,
Yeah. Yeah.
yeah.
So the banks are I still believe banks are very conservative when it comes to business
Yeah,
lending.
particularly the big four.
Yeah,
Yeah,
yeah, yeah.
yeah.
There are some
Yeah.
that are better than others.
Mm-hmm.
I know, for example, ANZ and NAB are usually my go-to for business lending.
Yeah,
I, but yeah,
Yeah.
And some bank like Macquarie, very difficult to even get a business loan.
Yeah. Yeah.
But then you go to a second tier lender, they can do it on the spot.
Yeah.
Yeah.
Yeah,
Yeah.
interesting. So
Yeah.
and maybe that's their play though,
Yeah.
right?
Yeah.
Like that second tier lending.
Yeah.
Maybe that's their play. Like
Well,
they see that
yeah,
gap
they're
and
very popular for
yeah.
that reason. For example, I had a overdraft facility, sorry, a line of credit attached to my bank account, and literally, I uploaded 6 months worth of bank statements into their portal.
Mhm.
They approved up to X amount
Yep.
within 4 days.
Yeah.
Now the interest rate is higher,
Mhm.
but then I tried the same thing with NAB, which was the bank I do my main
Yeah,
business bank.
yeah.
I got this thing about how as a broker you're a certain profession where they don't like
Yeah.
to release this much, and I just went forget it.
Yeah,
I'll just go
yeah.
somewhere
It's too
else.
hard.
Yeah,
It's too hard. We're busy,
yeah,
right? And
yeah. So
like
I'd
who
rather
can be
just
bothered?
pay a bit more
Yep.
interest
Yep.
and just get it done.
Yep.
Yeah,
Yep. I'd probably be the same.
yeah,
Like
yeah,
it's too hard. I'm
yeah,
like
yeah.
yeah.
So they're very difficult.
Yeah.
They're still very difficult. I feel like they need to get better doing that.
Yeah. Yeah.
That's where I think, brokers add that value for what
Yeah.
you've described, Derek, there is being able to just help you navigate what the right options are.
Yes.
And look, one of the things that we've heard from a number of guests that have been on the podcast is really around that cash flow piece.
Yes.
And, often you don't know that you need a facility until you actually need the
Yes.
facility.
Yes.
Yeah.
So
Yes.
often having that in advance
Yes.
is
Yes.
important. And is that something that you're seeing with business owners? Is that, they may not necessarily need a facility, but they're actually getting one, in preparation for that day?
Yes, yes, yes. So I'm seeing it now. Unfortunately, I'm seeing it also a lot for people wanting to pay off tax debt.
Mm.
Unfortunately, a lot of business owners do have outstanding tax debts, and your traditional lenders don't basically let you borrow to pay a tax debt.
Mm.
You'd have to go to these second tier lenders that can do line of credits, things like that. And so I am seeing definitely more of it. But it's a good point, Peter. You want to try to sort it out now, so then later on you don't get stuck.
Mhm.
And then often, if you're doing that, you're coming in a position that you're desperate, and maybe your finances aren't the way it should be, or maybe something's wrong and it's more difficult to get
Yeah.
that loan. So you should be having these conversations with your broker around, what do I need, what should I be doing. I expect maybe to take a hit in September, October in cash flow. What can we do to kind of get me through that period?
Yeah.
Even if it's a top up on your loan or something. But you should be definitely more proactive, because times are tough. Business owners are doing it tough. Life is expensive.
Yeah. Yeah. I
Yeah.
mean, Pete, you've said that a few times actually. It's like take the credit now while things
Yes.
are good, so that you've got it there when things are bad.
Yes. If they're
If-
willing to lend
Yeah,
you
and I
money,
think it's
take it.
just
Yeah.
You don't have to use it. Just have it.
Yeah.
Yeah.
Wow. I
Yeah.
love that. I love that you
Yeah.
said that, because
Yeah.
I think there is stigma around
Yeah.
taking credit
Yeah.
from the bank. Like no one
Yeah.
wants debt.
Yes,
Like what do you want
yes.
debt for?
Yeah.
But you're right. Like
You
take
need
it.
it.
You don't need to.
Yeah.
You don't need to use
Yeah.
it.
Yeah. No,
Yeah.
and then if you don't need it, you can close it off at a later date.
Mhm.
A lot of these lenders are short-term loans anyway. So I believe if you've got an opportunity, I would say if you're a business that's experiencing significant growth and you're making money,
Mhm.
do it now.
Yeah. Yeah.
Get that facility.
Yeah.
Just have it.
Yeah.
God forbid, you never know what's going to
Yeah.
happen. Because once you wait till there's a downturn and you
Mhm.
really need the
Mm.
money, what generally the lenders do is they look at your history
Mhm.
and they say, oh, 6 months, your business hasn't really been trading well, you're not showing much money.
Mm.
It's going to be a
Yeah.
lot harder and a lot more expensive than when you're doing it at the good
Yeah.
times.
Yeah.
Yeah.
Yeah. Agree. So let's just, I suppose, finish up with what are you seeing changing in the market? You sort of touched on it earlier
Yeah.
around how you're seeing a little bit more relaxed
Yes.
lending for business owners.
Yeah.
And we've sort of touched on the budget changes as well. What else are you seeing? Is there any sort of correlations between business and property at the moment? And,
So,
what's going on?
so up until recently, I was seeing more business owners buying property. But that's, I don't know if it's been the rate rises or what's
Yeah.
happened, but now they're more individuals. I am seeing a bit of a shift, which is maybe what the government is intending, that they're younger buyers. I'm seeing younger buyers more active in the property market. There's definitely definitely been a lending shift that they are trying to, some cases, loosen certain standards, but then on other cases they are making things a little bit harder. So there's there's always a lot of changes in
Yeah.
the lending space. The one thing I am seeing more of is self-managed super funds, people buying,
Yeah, right.
and business owners buying their commercial properties and
Yeah.
operating out of that.
Yeah. Yeah.
That's becoming very common,
Yeah.
and doing that through their self-managed super fund.
Yeah, right.
So these changes that happened in the budget, one of the winners was basically SMSF structures.
Yeah.
So they with an SMSF, self-managed super fund, they don't look at your borrowing capacity outside of that. So if you've got 10 properties with 10 loans and you're fully leveraged and can't borrow a dollar under your personal name or other structures, it doesn't matter in a self-managed super fund,
Yeah.
as long as the rent can justify the serviceability. So I am seeing definitely more of that. Business owners, lawyers, accountants, even some IT professionals, they buy their premise through their super fund.
Yeah, right. For their business.
Yeah, for their
Yeah.
business. Yeah, yeah,
Yeah.
yeah.
I mean, that sort of does make sense when I think about it, because how do you keep everything tight and
Yes,
clean,
yes,
right? Like
yes, yeah.
that's
And it's
what they're probably trying to
a
achieve.
great retirement strategy.
Yeah.
It's a great retirement because you're working out of there, and the accountants would know this better than others. But you can pay yourself rent that can cover the repayments, and then eventually after 20, 30 years, when that loan is paid off, that's your property.
Yeah. Yeah.
And the tax implications are
Yeah.
much better
Yeah.
when it's held in your super fund.
Yeah.
So definitely seeing a greater shift towards people buying in their self-managed super fund,
Yeah.
maybe some commercial properties. I believe commercial properties will pick up more because the negative gearing changes don't restrict them.
Okay.
And just from a market, I am seeing more of people looking to buy. I'm from Sydney. People looking to buy outside of Sydney. And I can imagine it would be the same in Brisbane. Brisbane's now the second most unaffordable city in the country. So you're seeing more people look to buy in Adelaide, more people looking to buy in Melbourne, because just Sydney and Brisbane have become too expensive.
Yeah. Yeah.
For typical people. Maybe high net worth is different,
Yeah.
but for your average owner, business owner or average individual, it's becoming more difficult to buy in Sydney and Brisbane.
Yeah. Well, I'd agree with that.
Yeah. Yeah, I was shocked how expensive Brisbane's become.
And look, I think, it's interesting that, I think a lot of people are looking at different options outside of traditional property, and look, commercial property is one of those things, and different things. And I think that's where just having someone that's able to give you the advice about, what's the right way to go
Yes.
and approach that
Yeah.
is so important, because the reality is these are very big decisions that people need to make, and
Yes.
getting them wrong can actually become very costly. Like a
Yes.
couple of small points. Everyone's just got to look at, you look at the interest rate go up by 0.25% and the impact that has. So just getting that right structure can make a big difference.
Yeah. I think it's important, not just as a business owner, but an individual. What's your goal? What's your long-term goal? What's your long-term strategy when it comes to property? Some people just want to pay off their home, which is fine.
Yes. Totally.
Versus some people want to amass a property portfolio, or maybe some want just one or two for their children, or just for a comfortable retirement. So it's you really should have a partnership with your broker.
Yeah.
A lot of individuals don't view their brokers as trusted advisors. I think if you've got a good broker working for you, it's really crucial that you're working together with him or her, your accountant, your financial advisor, to work together to best help you achieve your strategy. If it is to buy multiple properties, have a commercial property, do this, the structures are very different to just buying one home, pay it off, enjoy my retirement.
Yeah, that's it.
Yeah. So I think working with your broker and your advisor is very important.
And I think as well, like the checkpoints are different,
Yes.
right, in those strategies.
Yes,
Like,
yes.
you might just need to pay down a little bit of your current property to be able to buy your next
Yes,
property.
yes.
If that's your strategy. But people who just want to pay off their property, the checkpoints are different,
Yes,
right?
yes,
So
yes.
it depends on how quickly you want to move and
absolutely.
what you want to do.
Yeah,
So
yeah,
it's just different.
I believe it's very important to speak with your broker, know your strategy, know
Yeah.
your numbers,
Yeah.
and just review.
Yeah.
Every year or every 2
Yeah,
years,
okay.
review. Am I doing the right thing? Should I be doing something different? And it's it's a work in progress.
Yeah,
It's no
that's
one's
it.
got the perfect
Yeah,
plan,
yeah,
but the more you can prepare for it, the better
yeah,
you are equipped with it.
yeah, yeah, exactly. Derik, thank you so much. I just want to finish and ask, like, what do you think is the one piece of advice you would give to business owners who are either looking to grow their wealth through property, need access to lending for their businesses? What do you, I mean, you sort of did sort of say, get the numbers,
Yes, yes,
looking good and
yeah,
know
yeah.
everything. Is there anything else you
I
wanted
would
to?
I would say it's very important. Have a good broker
Mm-hmm.
that can help you.
Yeah.
Not all brokers do business or commercial lending,
Yeah.
so you want a broker that's very comfortable with business structures.
Yeah.
A lot of, especially new to industry brokers, they just do PAYG or normal employees.
Yeah.
So having a broker that really understands how a business structure
Mm.
works is very important. And then also knowing your strategy.
Mm-hmm.
Knowing your strategy. Okay, if you want to buy property, how do we achieve that?
Yeah.
I think if you get those two things right, along with knowing your numbers and trying
Yeah.
to save up a deposit and clean the conduct up, you should be
Yeah.
okay.
Yeah.
Yeah.
Perfect. Derik, thank you so much for joining us
My
today. This
pleasure.
has been
My
such an
pleasure. Thank
insightful
you.
conversation,
It
and
was great to be here.
I really enjoyed it, and I'm sure Pete did as well. Did, how do people get in touch with you if they want to
Sure.
get in touch?
So Facebook, online, my website's www.australianloanhouse.com.au. We're on Instagram, we're on LinkedIn, we're on Facebook, even just Google
Yeah.
myself or
Yeah.
Australian Loan House. We've got over 220 Google reviews, so
Yeah.
that's the easiest way.
Yeah, perfect. And if our listeners do have any questions,
Yeah,
they're more than welcome
absolutely.
to reach out to you.
Absolutely. Would love to
Perfect.
help them.
Well, thank you so much, Pete. Thank you for joining me from the other side of the country
Thanks,
today.
Pete.
Yeah, thanks for the opportunity. I think it was a really insightful conversation. And Derik, thanks for the generosity because I think some of those tips there are really things that people can take away and make sure they just make the right decision
Thank you,
with
Pete.
some of those key things that really make a big difference.
Thank you. Thank you very much. I hope I was able to help some of your listeners.